Welcome. Thank you, everybody, for joining us for our latest community forum. We are excited to have Mike Lonergan with us today. He's our Pierce County Assessor-Treasurer, and I'll introduce him formally in a second, but just wanted to give you all a little quick summary of what the Mustard Seed Project does. We serve seniors on the Key Peninsula, and our primary mission is really to support seniors to age in place safely in their homes. So we have a whole bunch of programs that support that, transportation programs. We have classes here at the Crandall Center, our senior center. We have yard care program, friendly visits, home repairs, all those kinds of things that that support seniors to stay in their homes as long as they can. And we're really excited as well to be almost complete with our construction of assisted living and memory care homes right across the street from our building here in Key Center. We expect to open for residents in January of this coming year, and excited about that because it's the first supportive care home setting on the Key Peninsula. Up to this point, people who have needed supportive care, seniors who have needed that, have had to go outside the community. So we're really grateful to have now the opportunity to offer a local option for Key Center seniors. So we have these community forums every couple of weeks. We asked Mike to join us today because to speak on the topic of property taxes, because we know that is an issue that's important to a lot of folks, and especially to seniors. So Mike, thank you again for joining us, and please take it away.
All right. Thank you very much, Eric. And it is a pleasure to be with you all. And I'm going to, the first part of my presentation, I do have a few slides that will kind of tie in with it, I think. So I'm going to try to bring that up now. And by the way, I apologize for this. I really do have a pretty ugly cold sore here that hasn't gone away yet. So it's healing, but I don't look pretty like I usually do. Okay, so let me see. I'm sharing this, and let's see if you now see kind of a title page. Do you see that? Okay.
Yes, Mike, we can see it.
Very good. Just making sure. I don't use this system very often. I do get a chance to speak to the public quite a bit, but not always in this fashion. So I just titled this "Learning to Love Pierce County Property Taxes," because of course it goes all the way back to the Bible. They don't like the tax man. It's right there in print. So that's been going on for thousands of years, but it's okay. It's kind of an American pastime to complain about taxes, property taxes being one of them. But we try to explain it, help people understand it, and mainly to reduce the anxiety that comes with the world we've been living in the last almost 10 years of values going up, up, up on residential properties. And when people see those increases, kind of panicking that, oh, my taxes are going to go up by the same amount as the value. And that is not the case, which I'll attempt to explain. So let's see, moving forward here. This is just a couple of our staff members. When we do send them out on a 6-year cycle to visit every single property in Pierce County once every 6 years, we do it by sections. So we were actually on Key Peninsula about 3 years ago, and we will be there again in a couple more years. But we just finished up earlier this year all the far south and east parts of the county. So heading out toward Mount Rainier, we were in Eatonville and we were in Buckley and all those places, kind of as far away from Key Peninsula as you can be in Pierce County. But you see that our folks are in marked county cars. They're little white cars. And there are 20 of these people that go out to the residences. And there are also 10 commercial appraisers that go out to every business and factory and warehouse and so forth in the county on that 6-year cycle. So they do identify themselves. They have an official badge. They wear the what you see, the vests and the jackets that identify them as from the Assessor-Treasurer, and they work for you. So the law says, doesn't matter whether you have a sign up that says no trespassing or the sign I like, protected by Smith and Wesson, all those kind of signs, don't overcome the fact that by law, we have the right and the responsibility to go on your property for purposes of property tax valuation. And we're not there to, make trouble. Oftentimes, if we have any questions, we knock on the door. You may or may not be home. We have to watch out for dogs and that sort of thing. But we're there simply to confirm the file records that we have of your property, the square footage of buildings. Has anything changed since we were last there 6 years ago? Views are important. They add to value, and if the view has gone away, we will subtract that or at least reduce it if the view isn't as good as it used to be. Those kind of things. Wetlands, we're looking at those things to determine if we have the right value for the acreage, the land, and the building envelope and its condition. So those are the things we're out looking for, and that's how we get our accuracy. Many other private organizations use our information. Our website happens to be the most used of all Pierce County websites because realtors, mortgage bankers, private appraisers, insurance people all look there for information. So we try to make sure it's correct. This is a kind of a quick view of my staff. I'm not smart enough to get this off of the slide presentation where you see the things off to the side. But anyway, you can see most of my staff there. There were 77 people here at the County Assessor-Treasurer's office. Kind of an interesting point is it is the only combined assessor and treasurer office in the state. Every other county has two separate offices, one to value the properties and the other to bill and collect the property taxes. We do both in my office, so that's why it is a larger office than many counties have because it's combined. So over on the left in the kind of lavender there, you see all those field appraisers I was talking about, the residential and the commercial. Next to them, our whole product is data. So we have people who are data experts in the green there. Then when we get into the yellow, that's our front desk people in customer service and also those who answer our telephone calls in the phone room and also a live chat. If you're computer savvy, and you must be a little bit if you're watching this, then you can also chat back and forth and ask whatever questions you have about your value, about your taxes, about how to pay, about your application for an exemption, any of those things. And we'll talk a little bit more about exemptions and so forth as we go along. The next team you see there is the exemptions team. So they're dealing with senior and disabled people primarily in their principal residence who are able to qualify for a reduction, not a complete elimination, but a great reduction in their taxes if they qualify by income and by age or disability. Next to that is our personal property team. A lot of people don't realize this, but businesses not only pay tax on the building that they use, but they also pay a tax on the equipment that they use. So cash registers, computers, desks, tables, chairs, they submit to us a kind of inventory of what they have, and then each year tell us what they threw out and what they bought new, and then they are taxed at the very same rate as everybody else in their particular tax district is paid. And we'll also explain that in a couple minutes. The next team we see is the cartography team, which is those who keep track of the actual map of every one of 330,000 parcels of property in Pierce County. And whenever there's a new subdivision and a large plot is divided up into buildable lots, they're the ones who do that dividing and create the new property tax parcels. And again, our data is used by many other people. So now we can see the rest of our team is the foreclosure avoidance team, they're actually going to work this time of year, getting ready to auction off properties where people did not pay their property tax for 3 years. Very seldom is this an occupied residence or business. Oftentimes it's odd pieces of property that people have found they can't use for the purpose they bought them or whatever, and they let them go for taxes. We then offer them for sale to the neighbors or to anybody who bids on them. But the good news there is we start off the year typically with maybe as many as 2,000 properties where the taxes are in arrears. When we go to auction, right now it's down to less than 100 pieces of property out of the entire over 300,000 in the county. The last category we have there is our levy specialist and records. We have a lot of records. We're digitizing things that in the past were on paper or on microfilm. We're getting it all into the computer. So that's a process. And then the levy specialist works with all the taxing districts. So that is Key Penn Parks would be an example, Key Peninsula Fire District, Peninsula School District, the county itself, the county general fund, and then outside of all the city limits, we collect the road tax as well. So that's how you part of how you pay for the roads in Key Peninsula. So you're in all those taxing districts, as well as the state school levy. One thing you do not have over on the peninsula, Gig Harbor and Key Peninsulas, you don't pay the Sound Transit property tax that we pay over here. You've heard about the license tabs, and we pay about $0.015 more sales tax than you do for Sound Transit, but there's also a small portion of the property tax. So those all go together to determine what your tax rate would be. So moving along here, values is the big question. So values increased in Pierce County about 19.5%. This is for residential properties in 1 year from 2021 to 2022. We were in that just kind of feverish lack of enough listings, people eager to buy. And so prices kept going up. And what our job is to do is to match that market as it was on January 1st of this year, 2022. That will be used as the basis for your 2023 taxes. So we're always running basically a year behind. Now that things seem to have leveled off and maybe even peaked and might start going down in value because interest rates for creating a mortgage have gone up, a person's ability to buy is decreasing somewhat because of paying the interest. And so now people will say, well, now you have my property value too high, where before you were trying to keep up with the market, maybe the market is dropping. Well, we will be lagging a year, but we will keep track of that and catch up with it. I have members of the staff that all they do is track the sales of property, both residential and commercial and raw land, to come up with the right number. Now, on this graph, Key Peninsula does not show up. So I have the numbers in front of me, but they're not in front of you. There are 11,000 parcels of property on Key Peninsula, 10,984 to be exact. The average value in 2021 was $273,600. $273,600. This year, it jumped to $335,200. So that's an increase of $61,600 in 1 year's time. And that was one of the higher percentage increases in the county, a 22.5% increase. You see that if you look at Gig Harbor, your neighbors, their values very, very different than yours on average. Instead of the 335,000 I mentioned for Key Penn, their value went from 513,000 up to 583,000, which was an almost $70,000 increase, but it was only 13.6% because it was a percentage of much larger numbers. You both are in approximately the same taxing district because you're both in the Peninsula School District, but they have the PenMet parks. You have Key Pen parks. Those levies are slightly different. They have a different fire district than you have. So the amounts of tax are not exactly the same, but they're based off of these values. However, when your taxes go up 20 or your values go up 22.5%, your taxes absolutely will not be going up 22.5%. And there is a reason for that, which I'll explain here. This shows you, and I use the various school districts on this basis, so you can look at the whole Peninsula School District. They're kind of in the middle of the list. The average value is showing in 2020 as 591,000, jumping up to 672,000. And this is from the previous year. So this is 2020 and 2021, but it still serves the purpose, even though at the top it says 2021 to 2022. We arrive at the tax rate with the previous year's values. So what you see is the tax rate, because of the very high value of properties in the entire Peninsula School District, your tax rate is one of the lowest in the county. You see many of them range around $11 up to $12. Some are $9 and $10, but you're at $8.96 per $1,000 of value of your property. So it's multiplying the value times the rate is what gives you the actual tax. And again, because you are blessed to be in an area that shares the school tax with a high value property area, the Gig Harbor Peninsula, your values are significantly lower. In most cases, of course, there's some high value properties, waterfront properties on Key Peninsula as well. But on average, it's lower on Key Peninsula than over on Gig Harbor. So your rate is a really good tax rate, $9.83 per $1,000 value. So in this example here, taxes did not go up 20% or 19% or 22%. They went up 3.6%, an average of a $230 increase per parcel of property in the Peninsula School District. Why? Well, because state law, it's a good state law, I think, says a taxing district, be it the county itself or the fire district or the school district or park district, can only collect 1% more than it did last year in total dollars, plus the value of any new construction that has happened within that taxing district. So it doesn't ride up and down with the tax, with the property values. It stays much more steady by only increasing 1%. And that is without a vote of the people. What you will see on your ballot, and we have to be careful of this. I don't tell people how to vote, but I want them to be aware of what they're voting for. If your fire district, for example, says, well, we're normally allowed to tax $1.50 per thousand, but because of that limit, the 101% limit that I mentioned, well, we can't tax $1.50 per thousand. Now it's down to it went to $1.34 and then it went to $1.17. We need to get back up to $1.50 a thousand. When they advertise that in the voter's pamphlet, they will say this is not a new tax. It is just restoring the old tax rate, the same rate you were paying before. That's a true statement, but it's not the whole truth, in my opinion. If the value of your property when you were paying $1.50 was $200,000 and now it's $300,000, then paying $1.50 per thousand is going to be an increase in your tax, and you're voting for an increase in tax, even though all you're doing is restoring the old tax rate. I hope that that makes sense the way I said it, but that's true. You have to be careful when you're voting for something. And I mean, who doesn't want to vote for fire protection, emergency medical service? Very important. Voting for schools, very important. They make up the bulk of your taxes, but voting for roads, that's important too. So you tend to want to vote yes, but just be aware that yes, you are voting to in fact raise your taxes when you do that, even if the rate remains the same. Okay, let's see if I can figure out how to move on here. Did that work? Yes. Okay. This is the tax pie, if you will. Countywide, we're at almost $1.8 billion of tax that I collect. Where does your money go? And this is a countywide picture. It would vary from district to district a little bit, but in general, what you see is the big pink thing at the bottom is your local school tax, both the operating levies and any bond issues to build new schools or refurbish them. That's 36%. I don't know if you can see the fine print there, but that's over a third of your tax is your local school tax. Above that is a bluish colored piece of the pie that's also pretty big. That is the state school tax. That is almost 24%. So you add 36 and 24, schools are getting 60% of the taxes that you pay. And then everybody else gets the rest. You see the fire districts over in the little baby blue on the left are getting almost 11%. The county itself is up top. Our general fund is about 8%. And then the county road district in a very light blue on the right-hand side is about 4.5%. People inside the cities do not pay that tax, but you in the unincorporated areas do. The cities collect their own tax, which you see is the green over on the right, which is about 8% of the total. Then you have the library district, which is about 2.5%. We have flood control, which is about 1%. Everybody in the county pays that. And I mentioned the sound transit, that's in the kind of upper right, about 1.33% of what we collect. But again, you're not paying that. In your district, that little piece of the pie would not exist. When you go to our website, you can see this pie. We've added a new feature. You can see it for your house. You can see exactly how your taxes are divided up. The one I didn't mention is the park districts over on the left-hand side. Not a very big sliver, but kind of a dark maroon kind of color. That includes Penn Met, Key Penn, and Tacoma metro parks. Which between them get about 2.5% of what we collect. So that's where your money goes. Again, mainly to schools. That state school levy increased about 4 years ago considerably as a result of the McCleary court decision saying the state was not keeping faith with the state constitution, that their primary duty was to support the local schools. The state does so many things now that they didn't do in 1889 when the Constitution was written, but they're still supposed to primarily support the schools. So they had to add to that amount, and that's why people saw their taxes go up in the last few years. They phased it in over a couple of years. They put some limits on what the local school districts could collect in operating levies, but still, it was an increase of hundreds of dollars to each voter. And what people tended to do is say, well, my value is going up and my tax is going up. So I guess my tax went up because the value went up. No, it went up because the state legislature voted to make it go up because they were in contempt of court every single day that they didn't do that. Okay, so how do taxes get determined? It is by a vote of the legislature, by a vote of the county council, by a vote of the park board or school board, and by votes of the public. Anything outside of what are called regular taxes are special levies, and those are voted by you and typically need 60% of a yes vote before they take effect. That would be for bond issues, 60%. For regular operating levies, 50% plus one. But Our total property tax collections this year, as I mentioned, will be just under $1.8 billion. Of that, $745 million was approved by the voters, or 42% of the amount of tax you're paying was voted yes by your neighbors. Maybe not by you, but majority rules in America. So there we are. Now the total percent change in taxes, I showed it to you for Key Pen. Overall in the county, it was up about 5 1/3%. And of that, half of it was approved by the voters. The other half was new construction, which gets added to the tax rolls, and the 101% that I mentioned earlier that does not need to be approved by the voters. The thinking being, if you don't like it, you'll vote against your school board or county commissioners or whoever. So those are the slides that I had. I think I will jump out of this, and hopefully I'll come back on here and just say a few things about exemptions, because I know I'm talking to a primarily senior audience, and so there's a lot of interest in exemptions. Different states do it differently, and I will say in the state legislature there may be some changes coming up next January when they convene. But for right now, the Assessors Association around the state has pushed hard to make improvements in the senior and disabled exemption. So you can qualify for this exemption if you are any age and totally disabled, unable to work. And you have to, of course, verify that with a doctor's statement, or you have a Social Security disability or a veteran's disability. And you show us that. For the VA disability, it used to be 100%. The assessors found out that VA wasn't issuing a lot of 100% anymore. So it's gotten lowered to 80% disability qualifies you if it's a veteran's disability. But that's for any age. Once you reach the age of 61, so younger than many people retire, but at age 61, you can qualify for an exemption on your primary residence if your income is under, this is the magic number, $45,708. When I came into office 10 years ago, that limit was $35,000. We raised it statewide at the request of the assessors to $40,000. And then, particularly King County, they said $40,000 up here, that's chump change. We need it higher. And other small counties said, well, actually, $40,000 income is about average in our county. So we don't want to give everybody an exemption, then there's nobody to pay the tax. So what do? We came up with the idea of doing it county by county based upon the median household income in that county. That's why we came up with this odd number in Pierce County only. It's 45,708, which is 65% of the gross household income on average in our county. There are two levels of income even lower than that entitle you to even more of an exemption. And our staff helps people wherever you land on that. If you were making 30-some thousand dollars, you would get an even better exemption. There's two more steps there, but not to confuse things too much today. If your total gross income is 45,708 or less, then you do qualify. Now, not to be confused with some things you do for the federal tax, you're allowed to take various deductions and exemptions, and you end up at an adjusted gross number. It's not that number. It's really the total of all your income. And some things that are not counted for the federal do have to be counted under the state law for this exemption. So interest, dividends, annuities, IRA distributions, pensions, all are counted. There are some exceptions for wounded in the line of duty military disabilities. We subtract that from your total. But the other thing under the state law just changed this last year that is going to help some people to qualify is the assessors went to the legislature and said, we really should be able to subtract some other things, medical costs that we weren't allowed to deduct before, we can deduct now. And I will mention a few of them here from a list, but our team will help you if you do apply to make sure that these are all covered. Drugs supplied by prescription, treatment or care received in the home, health insurance premiums for Medicare, costs related to Medicare supplemental policies, durable medical equipment that you need, such as even prescribed oxygen, prosthetic devices, long-term care insurance. The premium you're paying can now be deducted from your gross income. And then insulin and dialysis, things like that can also be deducted. So it's a fairly long list. And that means if you made more than $45,700, say you made $50,000, but you had $6,000 worth of these medical expenses, you drop below the line and you get the exemption. What is the exemption? You immediately stop paying for all those publicly voted taxes, such as school levies and bond issues, which are considerable. So I showed you the slide earlier, that's 40-some% of your tax. It reduces your tax right away by that 40%. It freezes the value of your property. Now, if properties do go down, your value goes down and your taxes go down. But if property values continue to go up, as they have been for the last 10 years, yours is frozen and does not go higher. It can only stay the same or go lower. And then as you qualify for those other steps that I mentioned, you will pay less tax, a percentage reduction in the amount of tax that you pay. And if your income is extremely low, and there may be people listening right now who are living only on Social Security, that's all they get, and they have no other income. Now you can have money in the bank, you can have savings, and you would count the interest on those savings, but it's not about your wealth, about what you already own. It's about what income is coming in during the year. So it's become more liberal. I have to say this because we have this tendency now, and I don't want to get political, but when like the federal government says, hey, those of you with student loans, $10,000 of it is forgiven right now. Well, who's paying that $10,000? Other taxpayers, or we're going deeper in debt, but the state can't go deeper in debt. So we would have to shift the reduction we give you to your neighbors who are not getting the exemption, because the school district and the road district and all those that we talked about, fire district, they still need their budgeted money to operate. So it becomes a tax shift. Now in the county, out of 330,000 properties, we have about 12,000 of these senior and disabled exemptions. So it's manageable. When we give somebody an exemption that takes, let's say, $2,000 off of their taxes, in the taxing district they're in, it might take a quarter off of the value or off of the tax paid by everybody else in that school district, let's say. But that's the way it works. It is shifted to the other folks, but it's a smaller number of people qualifying, and they legitimately would have trouble staying in their house if they had to pay the property tax. There can be the exception, as I said, it could be somebody with $1 million in the bank, but has no income. They're just living off of their savings, and they could still get the exemption. So maybe it's not totally fair, but that's the idea. Is once you've reached the age or have a disability, the state wants to give you a break. And then, your children may pay a little bit more in property tax, but you're getting the exemption. So I wanted to explain that. On our website, there's a lot more information, and you can always call in, as I mentioned, to our telephone room where we answer those calls, or you can text in a message to us, and we'll be glad to answer further questions. We are not yet online with the senior and disabled tax exemption. You can print it off online, fill it in, and bring it in or mail it in. But because there are attachments required to it, we look at your driver's license to establish that is your primary residence and you are that age. And then we look at your federal income tax return to make sure you qualify. And if you don't file a federal tax return, which some seniors do not because their income is quite low, then we just look at your bank statements. You show us a couple months bank statements for the year in question, and we see that, oh, there's no other income coming in. So go to the website, come to our office at the Pierce County Annex, call us. We'll be glad to answer those questions, and I will be glad to answer any questions or anything I've made too confusing and haven't clearly explained here. I'll be glad to take another stab at it.
Thank you, Mike. That was a lot of really good information. Really appreciate it. Maureen, do we have questions from the folks on Facebook?
Well, we'll ask Julie about questions from Facebook. I'll field some questions from Zoom. How do you handle it if you can't get onto the property? And I'll just use myself as an example here. I have an electronic locked gate. You need a code to access it. And my husband and I both work full time. So how do you handle that if you can't access the property?
Okay, we will often leave a card or a door hanger on the gate, in this case, saying we were unable to access your property and we want to come back and take a look. So call that particular field appraiser's number. We do get, it's not the best way to value anything, but we get aerial maps of the county are done every 2 years. So they're somewhat up to date and they show some detail. What we would mainly see from that is, did somebody, add on to their building without a permit? We go out in the summer every year. June, July, and August is new construction time when we do go out on any building permits. And we'll typically have 4,000 or 5,000 building permits to look at during that time and add value of whole new houses being built or additions. But as far as finding out the condition, the best thing is to come on the property. When it's a gated community, we have been furnished those gate codes in many, many cases. If it's an individual home, we wouldn't have that, of course. And so we would just ask you to allow us to visit. If we cannot visit, then we have to do some guesstimating, and we don't like to do that. We want to be as accurate as possible, but we would look at the record and then look at the aerial photos, make sure there was no permitted improvement to the property, and then value it accordingly. Real important to mention, by the way, whatever value we put on by whatever means, every property owner has the right to a free appeal of that to the County Board of Equalization. And some people do take us up on that. We're going into that season now. The values went out in June. Then during July and August, people could appeal. The board is seated now, and they're starting to hear those appeals. Out of the 300,000 in the county, we have about something under 2,000 appeals out of the 300,000. But again, it's free. And if we get the value wrong by having not been able to view the property and there's something we don't know about it, because we like to look at if there is a view, did the view change? The condition of the house on the outside. We don't go inside of houses, but we often ask the property owner, have you made any major changes? And they tell us what's up.
Okay. And just somewhat along those lines, you may have already answered it with the aerial views, but if there's a large parcel of several acres, do your staff walk the whole thing?
No, we don't tend to do that. Now, we do have special cases. We have a little over 1,000 agricultural exemptions in the county. it's called current use exemption. And the state, in order to encourage people to keep their land in agriculture as opposed to developing it, they give a tax break of a considerable tax break for keeping it in agriculture. So in those cases, we are examining those properties more carefully to make sure that they are in fact in agriculture, that they're grazing some cattle or they're growing some crops. And so there we would look more closely, but most large acreage, that would be a case where we would be relying more on the aerial photography and also on changes that we get from the county planning department about wetlands. Those can decrease the value of property because you can't use it for anything, can't build on it. And so we get those overlay maps and use that to adjust the values of large parcels.
And when you're talking about someone's income to apply for exemption, is it the income last year that affects whether or not they get an exemption this year? How far back does it go?
That is correct. So it would be the most recent full year. So we normally get a lot of applications after people have filed their federal income tax, and they can show us what the previous year's tax was. We can go back as much as 3 years if somebody didn't realize they could qualify and they can show us documentation going back 3 years. We can, in effect, refund a portion of their taxes. And in some cases we do that. But mainly it's looking at this year's income for next year's taxes.
Okay.
And Mike, did I hear correctly that exemption is available to anybody 61 and up with that 45,780 in household income?
That is correct.
Okay. So maybe some people aren't aware that it is a possibility when you're that young, so.
Yeah, we think of 65 or even 70 as an age for certain things to kick in. Of course, I guess you could eat at the restaurant at 55 at a reduced price in some cases, but we settled on the 61. So it's qualifying ahead of the time that people would draw Social Security, early Social Security at 62. So that's the idea. And because that 1 year lag is why it landed at 61.
So a 64-year-old who wasn't aware of this could come in and if they had income that or below that amount for the last 3 years, they could get a refund on that.
That's correct. If we can document it, and we want people to absolutely get, what the law allows. Yes.
Okay, thank you. Are there other questions that you had, Maureen, or from Facebook?
That's all the questions I had. Julie, are there Facebook questions?
Yes, hi, there's one Facebook question, and I think, Mike, you already touched on this a little bit, but we have someone wondering if they believe their property taxes may have changed, like you mentioned the view, maybe their view isn't as nice as it used to be. Do they need to wait the every 6 years, or can they request to have their property assessed by someone?
They should make a request. If they think there's a change that amounts to something significant, contacting our office. And typically when you call in, most of our appraisers are in the field, but we always have some in the office so they can take those calls and, ask the right questions. And then oftentimes we will make a specific visit.
Okay, great. Thank you. That's all for from Facebook for now.
Well, thank you, Mike. And I just want to make this one final point. We were really grateful here at the Mustard Seed Project because part of the reason we were able to actually build the assisted living and memory care home was thanks to support from Pierce County, both the Affordable Housing Division. So with that support came one of the things that actually fits really well with our mission, which is that 30% of the residents over in a Mustard Seed Village, which is what we're calling it, will be low income, but at or below 50% of the average, AGI, I think it is.
Yes.
So that is thanks to support from Pierce County. And I just want to point out for those who, I don't really like to pay taxes either, but they go for good things in most instances. So I really appreciate that.
That's really the people in our office, that's why they love what they do. It seems odd to say that we would love crunching numbers and sending out tax bills and all that we do. But what I say to them, and I say to taxpayers too, every time you see an ambulance go by, every time you do drive on a road, every time your grandkid has a good day in school, that's all made possible, that and a lot of other things made possible by the property tax. That's just the way our society is set up to operate. So it's important. And when you're writing a check, here we have a deadline coming up. October 31st is the second half payment deadline. So, when people have a mortgage, they don't have hands-on payment of the taxes during those years. It's taken out by the bank and then sent to us. But once you start writing that check, there is a sticker shock. But if you can stop and think about what it is you're buying with that for yourself and your neighbors, you can kind of have a smile on your face while you write the check.
There you go. Yes. Well, thanks again so much for taking some time to talk with us. And for seniors, for others who are anybody interested, we'll post the number and the website on our Facebook page so people can find that. But great resources that you offered up there, Mike, and really appreciate it.
Excellent. Thank you. And I hear nothing but good things about the Mustard Seed Project. So congratulations for all you're doing.
Thank you. Really appreciate it. Have a great day.